This is a substantial charge that Boeing has just announced. It is taking a $4.9 billion after-tax charge for the second quarter. That works out to $8.74 a share. All of this tied into the 737 MAX. They say it's due to concessions and considerations that they will be making to customers, not just right now, but in the future for several years. The revenue and pre-tax earnings, because of all of this, will be reduced by $5.6 billion in the second quarter. In terms of Q2 production costs, they are going up $1.7 billion. But we should point out that Boeing says in announcing these charges that it is making the assumption that the MAX will return to service early in the fourth quarter. That's not a guarantee. That's not them saying it's for sure. That is their assumption at this point. Production, by the way, a lot of people have been asking, will they have to cut production further as this gets extended out? For now, they're keeping it at 42 per month, and they still plan to get up to 57 per month, which is where they expected to be this year. They expect to hit that rate sometime in 2020. By the way, guys, this is the part that Wall Street's going to be most focused on. The company expects to issue new guidance for 2019 at some point in the future. They're not saying exactly when. Remember, they suspended guidance when they were announcing their Q1 earnings. But again, an after-tax charge of $4.9 billion, working out to $8.74 a share for the second quarter, all tied into the 737 MAX. Guys, back to you.
Phil, the stock was down 2.3% today in the normal session. It's essentially flat in the after-hours trade. Was this sort of roughly in line with what analysts were expecting? I guess the key thing remains whether or not they actually do deliver the plane back in service in early Q4.
Right. I've talked with a number of analysts, and almost all of them say the same, which is we've got some models, we've put them together, we have a rough idea of what to expect. But those estimates, by the way, were all over the place. It's hard to say whether or not this pre-tax charge is going to be exactly in line with what Wall Street was expecting. The fact that we're not seeing a big sell-off on this gives you some indication that the large institutional firms were expecting this type of a charge in the second quarter. And again, it's $4.9 billion after tax.